The holidays have come early for investors, with stocks again moving on up to new highs as indices continue to climb towards the year end. At last check, the Dow was up triple digits, while both the S&P 500 and the Nasdaq were up even more. So, will the Grinch come and take away the stock market holidays? Let's take a quick look. Most assuredly, buyers have the upper hand lately. But are the bulls being smart, or are the bulls just being greedy? According to this chart from Jesse Felder of the Felder Report blog, it looks like they're just being greedy. This chart highlights the RIDEX ratio, which is a measure of the RIDEX traders' assets in bear funds and money market funds relative to their assets in bullish funds and sector funds. Felder likens it to being like margin debt, where this is a real money indicator rather than just a survey of investor opinion. The chart, which inverts the RIDEX ratio and puts it up against the S&P 500, shows that investors are at historical levels of bullishness. As Jesse Felder points out, even at the peak of the dot-com bubble, these traders weren't as aggressively positioned as they are right now, meaning they're being greedy. According to Felder, from both a short-term and long-term perspective, it's pretty clear investors have become greedy, and to a fairly rare degree. Felder added that, with a nod to Berkshire Hathaway's Warren Buffett, it might be wise to be fearful when it comes to your portfolio. And if you remember, Warren Buffett, he is infamous for saying, be fearful when others are greedy. Be greedy when others are fearful. Okay, so Jesse Felder talked about margin debt, and this here is the most recent chart from Advisor Perspectives with regard to margin debt. And again, it's the FINRA margin debt as opposed to the S&P 500. And the margin debt is in red and the S&P 500 is in blue, and it goes all the way back, the chart, to 1997. And you can see that the peak in the margin debt was probably there in early 2018, but subsequently has fallen off. Yet the S&P 500 has continued to rise. So with the fall off in the margin debt, does that mean we're going to have a fall off in the S&P 500? Well, not necessarily. But given that we're at the highest level in margin debt, at least back in 2018, and even now we're at relatively high levels, it's still time to be cautious. And here is another measure of that greed. According to CNN, U.S. investors are back in extreme greed mode as a China trade deal combined with unprecedented year-end liquidity and the seasonal hype of the Santa Claus rally has raised FOMO to almost record high levels. If you don't know, FOMO is the acronym for fear of missing out on that market surge. And looking at this chart, we are nearing the level we were at in late 2017. That level brought us into 2018 when we had that early year market plunge. And me, I'm patiently waiting for that fear of missing out to turn into plain old fear if and when the market takes another tumble. But we'll talk more about that on the stock market update coming tomorrow. And for today, that's ChewDog Charts. Thank you.